Hey, my name's James Dickerson and welcome to my YouTube channel. Now today I'm going to talk about house prices and what's happened in the last few weeks to house prices. Are they going up? Are they going down? Are we going to crash? Who knows? Well, we cover all of that in this video. Now this channel is all about my property investing journey and I want to invite you along on that journey with me. You see, I've been an investor for 23 years now and I'm currently building a portfolio for my two daughters. Georgia, who's 21, we've already bought 2 properties. You can see all of that on this channel. A renovation of a property up north, a new flat that we purchased down south, and we're also going to be building a property portfolio for my little baby, Amelie. So do join us on the journey by taking that finger of power, spinning it round, smashing that subscribe button, and hitting the bell notification so you get notified of all this new content. So, the mini budget a few weeks ago now. But what is happening in the market at the moment? Well, the problem that we've got is that house prices, the indications and the data we get is massively lagging. In fact, it's around 6 months behind, right? And that's because it takes so long to buy a house. You see, right now, interest rates are still okay. They're pretty good. There is some affordability there. Yes, rates have gone up significantly, but the rates that you were seeing on the news recently, I saw someone saying that the new rate was going to be 10%. That was a blip, right? And that happened after the mini budget. So what happened was Liz Truss and Kwasi, they launched this mini budget and the markets didn't like it, right? Did they? You saw that, right? The pound crashed. The Bank of England had to step in to buy a ton of debt off the government to give security to the pensions. And it was just really uncertain. And that's the worst thing that can happen in a market is uncertainty. Fastest way to crash anything is to make it really uncertain what the outcome's going to be. So everyone pulls back with a wait and see attitude. And so because of that, interest rates were forecast to go higher than 6%. This is the Bank of England's interest rate. Now that's a problem, not just for us, but also for the government because they've got record amounts of debts. You've seen Rishi Sunak has taken over as the new Prime Minister. We've got a £40 billion black hole in our economy. And so if the government have to pay high interest rates, that also makes it very hard for them too. So with Rishi coming in, the markets are more happy with who's in charge. They feel that he's going to steer the ship that little bit better. Now, we don't have to get political on this. You might disagree, but the markets, they're saying that they now feel that the rate will peak out at 4.75%. Now, that's before they've seen what Rishi does. So if Rishi comes in and he does some things and he reduces that deficit and he starts improving the country marginally and then inflation starts coming down a little bit, then this forecast might actually improve. And that's potentially good as well. So that could feed into house prices in the longer term. Now, you want to know what's going on today. Well, actually, the market hasn't shifted that much. In fact, the last data that we had was actually another house price rise. So we had a 0.9% rise in house prices in September of 2022, which meant that house prices on average went up by around £3,000, which is crazy, right? And so it's quite a significant rise. Now, if the market does go down, that also gives people a buffer. But remember, this is historical data. It's behind because everyone that's completing their sales in September or August, September, wherever, they're already got those deals earlier this year when the rates were really, really cheap and they're just completing on those deals. The last deal that I did with my daughter, Georgia, that took, I need to actually look this up, but more than 14 weeks, right? A very simple little purchase. It took more than 14 weeks because surveyors are so busy at the moment because everyone's trying to get a fixed rate deal at the moment to give themselves some certainty. And so it's very hard to get the bank out to survey the property, to then give you a mortgage offer. All of this stuff's taking crazy time at the moment. So all of the deals that are going through now are whatever the price was agreed before, because people don't want a chain to fall apart and then have to go back into the market. Now, this is going to continue for a few months. And I made a video earlier that I'm telling you now, the market is not going to crash in 2022. It can't crash because the deals that will finish in 2022 are all deals that were maybe started in the summer. So people have got mortgage offers with very, very good rates, and they'll just see those through to completion. Now, some people might get mortgage offers pulled, but a lot of the banks are honouring those deals that they had. So when you want to talk about when the market's going to go down, it's going to be next year. If it does go down at all, which it might. Now, the correction that they were talking about was 15%. But that was when the rate was expected as the base rate to go to this. Now it's expected to go here. What happens then? Well, no analysts have really come out of any data on what they feel a market correction will be at this as a base rate, right? At this as a base rate. Now, mortgages were stress tested at 5%. So that's new things that happen. So when we had the 2008 crash, times are very, very different then, because what happened in that case was people were able to borrow up to, some people, there were mortgages that were given 130% of the value of a house. 130%, meaning if the house was worth 100 grand, they'd lend you £130,000. Now, as soon as the market went down in 2008, that was so easy to go into negative equity at that point. And at that stage, people just gave back the keys, right? They just gave back the keys. Yeah, they might have got a default on their name or maybe become bankrupt, but they weren't willing to just keep those properties going, or they couldn't afford to keep those properties going. We haven't had that this time round. We've had a lot. When I was doing mortgages in 2006, 2007, it was super easy to get money. Like, I remember going into my mortgage broker and he would say, how much do you earn? And he'd say an amount of money, and it'd say, maybe you earn a little bit more than that. And people were self-cert mortgages, and you could borrow money easy. They would just chuck your money at you. I remember credit cards were the same. I mean, I used to get 5 letters a week about get this new credit card, interest only, and balance transfers, and all these things were very, very big back then. That's not happening and didn't happen more recently. Now to get a mortgage, they check so much stuff. And so there is that extra layer of protection. So they've already stress tested that people should be able to afford a mortgage at 5%. So if a base rate goes to 4.75%, then that should be okay. That should be okay. Now, also, a market can only crash if someone's willing to sell a property at a lower price. And what's happening today is people are sitting on their properties. There are reductions on Rightmove, which a lot of people are picking up on. They're saying there are 25% of the properties on Rightmove are reduced, right? That's what's happening right now. 25% are reduced. But here's what Rightmove's saying. Rightmove's saying that's actually better than normal. In normal times, it hasn't happened so much recently, but it is an indicator of where we're going. In normal times, it's plus 30% of Rightmove properties are actually reduced. So we're not at that stage even yet. We're not even back to normal times. Once you start seeing 40% or even 35% of the properties reduced, then you know we are in big trouble, and coming with the historic lagging data is going to be a big, big difference. Now, some people are just going to remove their property from the market, and that's also happening. So estate agents and Rightmove have less listings on than they did. So that can help keep prices up, because there is a pool of buyers which has shrunk, because a lot of first-time buyers have come out the market with a wait-and-see approach. But if there's less stock, the buyers that do want something, they have less options. And so maybe that just keeps the market flat for a period of time before we have a drop. I don't know any of this, and you don't know. I'm just sharing data that I'm reading and hoping you can digest it yourself and come to your own opinion. Maybe the market's going to go up. Maybe the market's going to go down. I don't know for sure. But what I do know is that it will take until 2023 until we really know what's happening. The stuff that's happening today, the deals that are getting agreed today, they're not going to complete until January, February next year. And that's when we'll get that data and we'll really understand. So let me know, what do you think is going on in the market? I know some of you are telling me the market's going to crash 5%, 10%. Some of you are saying that it's going to be 50%. Some of you are saying it's going to be the biggest wipeout in human history. All of you could be right. But do comment below. Let's get the conversation started. Be nice, be kind in there. Do like this video, guys. Make sure you subscribe if you didn't earlier. And do check out all my other content, including this video right here. Thanks for watching.